show us that, it can be done faster. It can, 1% in transaction fees or less than 1% a day, transparency. So that is what we are going to talk about today. Are stablecoins the future of cross-border payments or a risky experiment? And I'm really curious to hear what our speakers have to say on this. So I'll be passing it on now to the panelists to introduce themselves, because I still believe that nobody can introduce you better than yourself. So this is your time to shine. So I will start with Stone. Do you want to introduce yourself?
Yes, hi everyone. I'm Stone Atwine, and I'm the CEO and co-founder at Eversend, which is a fintech company building mostly around cross-border payments, but a multi-currency wallet, starting in Africa, trying to expand across the globe. And our goal is to make sending money and exchanging money very, very simple and very easy. This topic is especially interesting for us, for me, because we started leveraging stablecoins for treasury management, for collections from our customers. I think in 2021, so maybe 3-4 years ago. And this is a topic that is very dear to me. I've been in fintech for many, many years, but mostly focusing on cross-border payments. I'm excited to be here, and I hope we have a fantastic discussion.
Yes. Over to you, Larry, to introduce yourself.
Yeah, hi everyone. I'm Larry. I am a software developer and also a field founder. And I was working on stablecoins payments earlier on. But aside that, I'm an active user. I probably use stablecoins probably at least once, twice every week. Over the last 3 years up to date. So yeah, I guess I have a few things I know about that, which is why I'm here. Yeah.
Okay, thank you so much. Adeoye, do you want to go?
Yeah. Hello, everybody. My name is Adeoye. Well, you can call me Oye. I'm one of the co-founders at Busha. Busha is a licensed digital asset exchange in Nigeria, helping onboard Africans, Nigerians for now, into the crypto economy, providing on-ramp and off-ramp for them in this market. So that's what we do primarily. As an exchange, we have to be able to on-ramp individuals to buy stable coins for whatever reasons, and enable businesses also to use stable coins as a form of payments or global cross-border transfer. Yeah, excited to be here.
Thank you so much. And Bernard.
Hi everyone. Can you hear me? Just to show my chat.
Yes.
Yeah, my name is Bernard, CEO and co-founder of BitNob. What we're doing at BitNob is basically building a new financial infrastructure on crypto rails, with our primary focus being to connect the various payment switches across different countries and different continents, and making a sort of using crypto as a glue. So stablecoins is a big part of that. And yeah, personally, I've been in crypto since 2013, and I like to joke that we've been using stablecoins in Africa before stablecoins. If you've used Liberty Reserve, Perfect Money, Web Money, Equinix, eGold, and whatnot. So I'm really excited to see how things go. Excited to be here.
All right, thank you so much to our panelists for introducing yourselves. So my very first question, before we even dive into the questions, is anybody confused about what stablecoins are or what cross-border payments are? We're here to learn, so you can just raise up your hand or use the chats. Okay, I guess we're all clear. So my first question is to Stone and to Bernard, right? What are the specific challenges of cross-border payments in Africa that you've seen, and how can they be addressed? Stone, do you want to go first or?
Yeah, I'll go
Right now?
fast. I
Okay.
mean, cross-border payments is honestly just a mess in terms of the traditional way we move money, especially for businesses and also for individuals, especially for low-value transactions. So when we came in here, I basically started in fintech trying to solve the problem of me sending money back home to Uganda to my grandma. And the challenge was that sending $100 or $200 was super expensive. So the very first thing is the high cost of cross-border transactions. These days, a lot of things have changed. You know, you can go on to Eversend and send money, and it's easier. And of course, a few other companies. But most of the people who still use traditional systems or traditional banks to send money really pay a ton of money. The story we usually tell is if you're sending money from, let's say, Kenya to Ghana, what happens is that this money is, first of all, you're in Kenya, they turn that money into US dollars. Every time they exchange money, you're losing money.
Yeah.
So Kenya shillings to USD, you're losing 2, 3, 4%.
Yeah.
Then they send it to New York, but it's like our flights. If I have to go to Morocco, I have to go to Paris.
Yeah.
They send it to New York, and then there's 2 banks in New York that are saying, I bank your bank in Kenya, I bank your bank in Ghana, and then they exchange that money, they move that money in New York. Each of those banks expects some kind of fee, $5, $10, $7. The bank in New York that banks my recipient's bank in Ghana, then sends the money to Ghana and it's exchanged back to local currency into Ghana cedi and then deposited on the recipient's account. Now this takes, now they've improved it a lot, so it could even be like 2 days. It used to take 7 days, 8 days. The receiving bank would sometimes keep that money so they can use it for overnight lending and make some interest on it.
Yeah.
So the fact that it has arrived at the recipient bank doesn't mean that they will actually give you value, give the recipients value. So first of all, it takes that long. It takes maybe anywhere from 5 to 8% in FX loss, which is hidden. Nobody knows about it, like unless you're really looking. The sending bank will charge a fee. So you're paying anywhere between $30 to $50 plus 7% to move money. So that obviously doesn't work for a small value transaction because there's already like $40 that is added up as fees. So if you're sending $100, it doesn't make sense. Almost half of it is going for free. But also, even if you're doing business, the charge in the FX is extremely expensive. Can be a problem. If you're going to lose 5 to 7% to 8% on every transaction you do, what kind of business are you doing, right? And then there's all kinds of other issues, but that's the main one that I wanted to raise. The one about speed and cost is super expensive. Maybe somebody else can jump in with some of the other challenges.
Yes.
Yeah.
Okay.
Stone has laid a pretty good foundation to the problems. I think one of the other problems is the problem of fragmentation. So if you were operating in the EU market, for example, you can sort of have this license that covers the whole continent. But over here, you can have a license in Nigeria and you can't operate in next door Benin. You also have the problem of just illiquid currencies against one another. So the currencies are just exotic. So how much trade moves between, say, Nigeria and Malawi, for example. So you have to pay the price for these things. Now, when you're setting up and you're trying to set up across different countries as well, you pretty much have to deal with, different tax regimes, different compliance requirements, and whatever. You have to, physically set up an office there, hire people there. It just, it starts showing us that the amounts that fintechs raise to expand across the continent is something that they really need to do because of that. I think It's mostly that, just to add some context to what Stone has shared as well. One of the things that also happens is in the current with the current system of how cross-border payments work, actual money doesn't move between countries. It's just a sort of messaging, mostly just SWIFT. Of course, we'll come to talk about how stablecoins make those things better. But it's just it's also closed. If you think about this, it's a closed loop network where just a few banks, just a few incumbents. So if you got in maybe 20 years ago with your bank, then you're in, right? Now, maybe even if you're a bank, you might not have direct access to the network. You have to go through another person, 2, 3 institutions, and those costs you just keep layering those costs to the end user. You have no real visibility. If you send money between 2 African countries, you pretty much have no visibility until the money arrives on the other side as well. So those are just some of the general problems with cross-border payments on the continent today.
Okay, thank you very much for that. So let's just quickly talk about stable coins, right? Oye and Larry, being stable coins pioneers, right? What would you say is the rapid growth of global adoption of stable coins in Africa, and what are we seeing now, right, in terms of stable coins in Africa as of right now?
Oh, sorry. Well, the adoption for stable coins in Africa is primarily driven by payments, and that's why I think this conversation is interesting. Most of the USD inflow into markets like Nigeria and so many other African countries is remittances, and usually they go through banks. And over time, we've started seeing that most people have started exploring how can we send in value into the market, get the best rates, because the banks don't want to give you the best rate sometimes, or you're forced to sell at a certain rate. So we'll see the adoption where people start using stable coins as a way of sending value in. And then you have businesses, well, let's focus on Nigeria, trying to make payments, cross-border payments for suppliers to vendors, repatriating cash from, profit, and they can access dollars because we are the dollar scarcity. A lot of Nigerians that are on this call is familiar with that. CBN started limiting how you could access dollars. You have to fill endless forms. So it became easier for, okay, you're sending value into the country, so you're using stable coins. It's easy to just use that same, rail to move that value out of the country. So it's not like it's replacing dollars that's coming in. It's not like there's additional inflow that is happening. It's just replacing the form with which USD is being brought into the market. So the adoption we've seen, and Chainalysis tries to do some sort of analysis of on-chain movements in Africa, because exchanges are fragmented. A lot of dealers are on WhatsApp or on Telegram, so it's hard to accurately say this is the number. But we've seen numbers around 150 billion being the volume of stablecoin flow as of 2024. That's just showing you the significant impact on trade that is happening, on cross-border remittances and trade that is happening in Africa. So I think that's one of the big pointers to adoption in the market. That in the same Chainalysis report, there was this report that the growth accelerated of, I think, about 300% over the past 2 years. That's just on-chain analysis. So you can imagine what's happening in avenues that you do not have access to. So I think one thing that is clear is we cannot deny the fact that stablecoin growth is massive. It's fueling how people are moving money from Nigeria, from Africa, outside of the continent and into the continent. Because it's easy to think about the fact that people are moving money out of the continent using stablecoin and not think about the fact that the supply is coming from somewhere, So there's an inflow of stablecoin as well into the continent.
Thank you so much. I have a follow-up question, but just so we stay on track, so I don't digress. Larry, as a software developer, what do you have to say to that?
Yeah, I mean, Adeoye really touched on it, right? But there's also something else that is quite missing. Aside remittances, there's actually a new play of, of companies like Starlink and crypto wallets like Coinbase wallet, allowing people repatriate funds outside of the country with stable coins, or remote workers here in Nigeria using stable coins as a kind of like layer to receive, their payments from economic activities, essentially, right? So it's really huge. I speak to a lot of people here who just take most of their payments and salaries in stable coins, and they're also able to use that on chain, savings, interest, lending it out, and all of that. I mean, it's way better than, and if you look at the inflationary situation of the country right now, you're like, what, your naira is essentially useless. You're getting like what? Yeah. You're getting like what, 16, 15% in a situation where the country inflation is about what, 35, 36%. That makes no sense. You're essentially losing money when you think about the real return on your investment. So people are using this for, especially in the country, for remittances, economic activities, getting paid, savings, investments, and something else that's also, that's also kind of like increased the activity of stablecoins here is the investment by companies like Coinbase into, these cheap chains, research and development that has gone into like these cheaper chains, prior in the past. At least when I was running the company, most people would be like, it probably costs $10 to send a $100 transaction on chain. That was like maybe like 3-4 years ago. But these days it's probably like what, $0.01, right? Less than 10 cents. You could send millions of dollars essentially across. So those are actually the major reasons that I'm seeing these days that's kind of like, inflating the usage of stable coins. And I mean, like Joe said earlier, I skimmed through the Stripe report, and Nigeria was probably mentioned like what, 2-3 times there about usage of stable coins. So that means, it's not just what we are saying, it's something that everyone is seeing across their day-to-day. Yeah.
Okay, thank you so much, Larry, and thank you, Adeoye. Which brings me to my next question. We've now established, challenges on cross-border payments. We've spoken about the adoption of stable coins now. So how do you see stable coins and the traditional cross-border payments compare? How do they compare in cost, transparency, and speed? Bernard, do you want to go first? I would like to hear everyone's thoughts. And please, before you go ahead, if you have any questions, you can just use the chat or raise up your hand. Keep the conversation going in the chat as well. So Bernard, please go.
Okay, I think for my last point, I've probably maybe started going into that. If we're looking at say transparency, like I rightly mentioned, companies like chain analysis, just by looking at the on-chain activity, able to estimate, what kind of activities are happening as well. Now, in the traditional, system, when you're using the SWIFT, for example, like I mentioned earlier, you pretty much don't know where the money is. Like, I've sent money from Nigeria to the US, or the US Nigeria, you've collected a telex, you just waiting. But if it takes 3 days, 4 days, like even the banks will tell you they don't know where it is at the moment. It's somewhere in the loop. So that transparency is not there compared to a stable coin. All you share a link to an explorer, and then pretty much there's no argument. It's either you've sent the money or you've not sent it. There's no shenanigans happening there. I think access is also very, very important. Access is really, really important. There's a section of people that we don't talk about much when it comes to crypto, and those are people who pretty much don't have your regular standard IDs, regular standard documentation, and whatnot. So what it does is that even though we say we're promoting financial inclusion one way or the other, like I can't even KYC on a fintech, right? Even if it's doing cross-border payments, like I don't have, maybe I'm an IDP, right? I'm already excluded. But then if you can put me on a stablecoin wallet, I pretty much don't need to KYC or whatever. Like, so that just that access is really powerful for a lot of people. Just by having the wallet, they are connected globally. I think the other thing as well is that so the interoperability part of it as well is really key. So the way I think about this is, USDT is USDT anywhere across the world, right? Like there's no fake USDT, right? There's no counterfeit USDT. It's anywhere across the world. So you're not going to discriminate my USDT and say because I'm a Nigerian, you won't take my USDT. But like if you have a Nigerian card, you can't pay. You can't pay for something online, right? So just that fact that it's interoperable, there's that access and whatnot opens a lot. I'll leave the rest there, so I'll leave the rest for the chairman to take it on.
Okay. Does anyone want to go next?
Just very quickly to touch on what Larry said about the costs. Like the comparison is crazy, right? So you're thinking traditional cross-border transfer sits here and stablecoin on the right? So in terms of cost, you're thinking at least $50 and 5% traditional stablecoins is gonna be 0.1, $0.01 plus maybe a bit of FX. In terms of speed, instant versus 1, 2, 3, 4, 5 days, transparency is, you can see, I can't tell Bernard that, I sent you money. No, I can see, right? He just has to send me a link and I say, here is where the money is. There's nothing like that. And it's instant. So in terms of transparency, you can see where your money is at any one time. Anyway, if he has sent it, he has sent it. If he hasn't, he hasn't. It's that simple. And then these banks, what I said, using it for overnight lending after it arrives, and then you really don't know where your Swift transfer is for 3 days. You absolutely have no idea. The sender sends you this document that says, oh, I sent it to my bank. Nothing shows that the bank actually remitted the money. So it's really crazy. And then the speed thing, like I mentioned, 5 days versus instant. That's the real comparison.
Okay. I think what I would say about comparison between stablecoins and traditional cross-border payments, because we have to remember, and I think you mentioned it at the beginning of the conversation, that stablecoin is just a tool, right? For it's a method for cross-border payment. It does more, but it's just one of the rails that you can use for cross-border payment. So when I'm thinking about cross-border payment, especially from the end user's perspective, a lot of times when I have clients at Busha who are trying to move money across border, we're using stablecoin for that transfer, but they don't necessarily see it. So the difference that's happening here is that they don't even have the wallet of the recipient on the other side. This is just a tool. So while I could have used the traditional banking system via Swift to move that money from Nigeria to Singapore or to Belgium or wherever, right? What's happening is we're taking the stablecoin and using payout rails. So we still have to work with payout partners in different markets. The difference now is I can swap a stablecoin into fiat in Singapore instantly through my payout partner. I can swap the stablecoin into pounds or into euros through my payout partner in Europe, and then settle through the local banking rail in that market. So that's what is happening, where that's how you're circumventing the SWIFT system today. And that's what brings the speed into it. So if you have sophisticated users on both ends, then you have the full transparency where you give me your wallet address and then I send money to that, I transfer my stablecoins to that wallet and you confirm it. But when it's a big corporate, today, a lot of them don't care. What they just know is I can settle this transaction in T+0 or T+1, worst case scenario. They're still getting a payment confirmation from a bank. So we're still using traditional systems. We're just circumventing it by having other payout partners who are happy to accept stablecoin in different markets. And that's where I think the brilliance of this technology comes from.
Yeah, thank you so much for that. So, at the end of the day, even though I'm not an expert, I was right. But yeah, let's keep it moving. Larry, do you have anything to add to that?
Nothing. I mean, I think Stone really
Yeah.
explained the transparency and the speed and cost issues. Yes, so I really have nothing to add here.
Yeah.
Sorry,
Thank you so much.
I add something to that.
Yeah.
What I do is so like very, very, very important point, because while everyone might be really excited about stable coins, you can use stable coins. The truth is that not everyone will be sophisticated enough to use this directly, right? So the magic is in how do you still achieve the same thing without putting any technical burden on the customers. So it takes me to a very important point, which is that traditionally, so let's say Stone wants to do business with a US company, he wants to maybe say power, payouts for them in Africa or something like that. Two things. So either Stone has to set up a US entity where they'll be giving him money there to settle him, and that settlement, mind you, is not same day. He has to wait maybe a couple of days. They do it. He pays out here, so he always has to wait to rotate the money and get the local currency here to keep on powering his operations. Or what if they want to give him the naira here in naira or whatever local currency in Africa to hold? Like, they don't know Stone, they've not met Stone before. Why should they give him $1 million worth of their money to keep up doing payouts, right? The magic of stable coins here is that there's that trustlessness. Like a US company and a company in Kenya can instantly just start moving money across those rails because there's something important: finality of the settlements, right? The settlement finality. All banks, correspondent banks or whatever, they do maybe a close of these settlements, close their books and whatnot. But like for every $10 you send, it's confirmed on the other person's side as well. So just figured I wanted to add that key point.
Okay, thank you so much, Bernard. Since we're already on the topic of interpretation, right? How do we see stable coins and the existing payment infrastructure interpret seamlessly? And what do you think will be the main standardization hurdles that need to be overcome in order for these two payment methods to be interpreted? I will start with Stone.
Yeah, that's interesting. So that's what Oye began to talk about, is that it's an interesting time because we've seen a situation where the traditional systems are starting to speak to these blockchain platforms, which has created like a super crazy business model. A lot of people here may know businesses like Bridge that just sold to Stripe. There's another one called Borderless. There's another one called, I don't remember all the names, but there's ourselves, like what we're doing, including, trying to connect wallets to like mobile money numbers or bank accounts. This is stuff that guys tried to do many years ago. It just wasn't the right time. We're now in this situation with Trump, with deregulation, where everything is just making perfect sense. And people are building these platforms where they're speaking directly with the traditional banking system. So that interoperability is extremely important because now the off-ramps and the on-ramps become super easy. I can build an API that talks directly to a bank account, and money can be delivered into that bank account. I think the the timing is fantastic. The tools are now there. We're going to see so many platforms, so many companies trying to build this out. We already have like tons of people reaching out to us and saying, hey, I'll help you send money to 50 jurisdictions. Just send me stablecoins and an API call. And you can imagine what that means. So I think the price is going to go down. The use cases are going to explode. One of the other things I wanted to talk about, like for us, really what we started doing with stablecoins in 2021 was treasury management, right? Because we used to hold US dollars, let's say, in France or in the UK or in the US or in Nigeria. And then you have to, because we hold money in all the different markets that we operate. So we're talking about maybe 12 markets. I'm not sure how many places we're in now. And then you, like every morning, you have to decide where do we need money? And then you have to do a transfer, which goes through the Swift platform. And then that is going to take you, again, like 3 days. So that means you have to anticipate 3 days, the volume that you will need in a specific country. When this started, what we started doing, and this is when I started seeing the magic of these stablecoins, is we started holding all our treasury in USDT and USDC, and then started getting different liquidity partners in the different markets where we operate. So every morning, not even on a daily basis, now we can do it like every 3 hours. We say, oh, we have a shortage in Nigeria, or we have a shortage in Kenya, and we'll just send that and we'll get liquidity in any of those markets. So the use cases are crazy. They just spoke about like Starlink collecting payments from places in Africa. In South America, it's crazy, like the traffic between the US and Mexico or all these companies. Just because we've reached that level now where these blockchain platforms or these stablecoins or whatever we want to call it can speak directly to local platforms. My biggest worry, last point, is that in Africa, the regulators are actually keeping us behind. Because when you tax stablecoins or crypto, then you're in trouble with the regulator. The only problem is that guys are going to come from the US. We started using this long before any of these bridge. I don't know. We started building this stuff long time ago. I think Bernard has been in the trenches for so long. But because of regulation, we built it and we shelved it. I'm not going to use it in Nigeria. I think up to today, we don't even give our customers in Nigeria access to this kind of stuff. But somebody from America, Binance, which has no jurisdiction, I don't know where they come from, will come in and do this. So as African entrepreneurs, we're in really big trouble because we are on the ground. People know us, people know you. They'll say, who is dealing crypto in this country? And then you're going to be in trouble. So that's something I wanted to bring up. In all these other markets, local entrepreneurs are able to access the local platforms, the local banking systems. But in Africa, African entrepreneurs cannot do that directly. You still have to hide or to look for somebody in America who has some kind of hidden access to give you that access. So it's a bit of a problem. But I think things are changing. That's a good thing. The only problem I see is that we are moving slower. Yes. Yeah. Sorry for the long rant.
No. I was even going to ask, like, do we predict that in the nearest future, the regulation policies are going to relax a bit? Do we predict that?
I think so, because we are followers in terms of regulation, it will change. But the speed at which the technology is moving is that an African builder like Lanre cannot wait for his regulator in Nairobi or in Kampala or in Accra to read the regulation from London and then take your time. I mean, like that's 3 months or 1 year or 18 months is like 10 years in builder's time, right? If you've lost, you've lost.
Yeah.
I think from a regulatory perspective, definitely regulatory clarity is very slow. And I think that's a global thing for crypto, because even in the US, you see that there's the excitement for Trump's presidency was because it was going to make crypto more mainstream, it was going to bring the stablecoin policy in place, have that clarity there. So I don't think it's unique to Africa, but it is annoying. That's the fact. We've been engaging regulators for 5 years before we got admitted into the SEC program and got that cover. We are engaging regulators in other countries right now, and we're getting into sandboxes in 2 other countries that have not announced yet. So in some ways, this regulatory clarity is coming. And the good thing is, the way South Africa started issuing licenses, the way Nigeria started showing that, okay, we're going to issue licenses, other countries will start taking a lead from that and then start making it happen. And then, it becomes a free market if you can get a license, play in the market. So I think that part, I am more optimistic on that front, that regulatory clarity is close across different markets. On the interoperability part, I think one of the interesting things for me is what the likes of MasterCard and Visa started doing, with stablecoins, where you can now have stablecoin-backed debit cards. Obviously, this is still limited by the regulation in your country, but yeah, they already have the rails for that, where you could have a physical card. If you have a bean sponsor, you issue that card, make payments at the merchants from your crypto wallet, and that's settled into a wallet with MasterCard. And that can be converted via Circle, for example, into USD for settlements and all of that. So that relationship, I think, is starting to build, where a lot of traditional financial institutions are adopting stablecoins into their rails because it just makes sense.
Okay, thank you very much. I know we're almost short of time. However, I know that we've talked about the risks associated with stablecoins so far, what it looks like in the future. Or I want to talk about how right now, let's look at next year. Right now, how do you think that we know we are hiding behind other people, but how do you think those risks can be mitigated as of right now for those that are founders in the room and they're dealing with stablecoins? How will that be mitigated for them now? Those risks. Adoye, do you want to go?
Sorry, I do not completely understand that question. Risk associated with stablecoin.
Yes.
I think the point that has been highlighted multiple times is the transparency of the blockchain, where if you're using stablecoins for payments, especially when you have sophisticated players on both sides, if you have wallets on both sides, if I transfer to you, you can confirm that this transaction has been completed. So the risks associated would be, what stablecoin are you using? Either for your treasury management or to protect yourself from devaluation and the likes. And I think the biggest stablecoins in the market, which is USDC and USDT, which controls almost 80% of the market, they are fully backed to a great extent. At least we know USDC is fully backed. We know that.
That's what they say.
Yeah. Well, they say it's audited, right?
Yeah.
So I think the interesting thing is there are a lot of issuers coming into the market now, trying to introduce different types of stablecoins. And that's where it becomes interesting, where you have to be sure that this issuer that is coming into the market, do I want to use them or do I want to use an existing rail? They are finding other innovative ways to attract customers to get market share out of the big giants right now by either giving you yield, access to yield, giving you access to that share, which USDT obviously doesn't give a lot of customers now, but you'll be trading that for the security that exists with the incumbents. Yeah, I think those are the things that just matters, where you have to be sure that any stablecoin you are adopting or you're using is secure, is reputable, or you just go with the popular and the ones that lasted the past decade. Yeah.
Okay. Thank you very much for that. I will just take the questions now before we start taking other questions. And some people had shared questions with us in preparation for this call, so I will just be sharing that as well. So the first question by Oluwatobi is, why is it easier for foreign companies to operate in Africa than local companies? Does this mean incorporating in a foreign country makes it easier to penetrate African markets? Does anybody want to go?
I should want to say it here. You know that.
Well,
I think I don't know about incorporating in a foreign country, but Oye, Bernard, Lamre, if you're in Lagos, they know you, they can trap you. It's not like the Binance guy who just showed up and they said, hey, now we have you. I mean, he can stay in America or wherever he comes from. So that's the real challenge, that foreign companies can say, here is our app, download it. They can somehow find a way to get access to Rails, and they can do it. But that's not something, I'm from Uganda, that's not something I would comfortably do in Uganda. The annoying thing is that, that means that we can't really compete with these companies. So I don't know if incorporating in a foreign jurisdiction really helps. Also, some of the foreign companies are almost always bigger, and it's harder to crack down on them. So, if Coinbase operates in Lagos, I don't know how it's going to be difficult, but they can come after Busha very, very easily, right? But I think there's ways. Like I said, I think the regulatory thing is a huge risk. There's a big risk with regulatory crackdowns, but also things are really genuinely starting to change, and we will see a better environment for us to operate. One of the things that I'm really excited about is us actually putting our own African currencies on chain. So very long time ago, I remember we used to trade with NGNT, which was an African a stablecoin for Nigerian naira. I see now there's is it CNGN? The guys who are switched on probably know this. That has come.
Yeah.
We've been having a conversation with the government of Uganda to see if we can create a UGX or a local currency stablecoin, and we're going to see tons of this across the continent. Now that makes stuff more interesting, because what happens easier stablecoins that are sanctioned by the central banks.
If I may, Stone, just building up on your last point, this is Weezer from eBanks, and this week in FinTech. We're also organizing stablecoin in New York in May. I've been hearing conflicting views about the effectiveness of local currency stablecoins in the market. Some people that I was chatting to on Twitter last week, including a gentleman who was a co-founder of the consortium that did US NGNT, was saying that it doesn't necessarily introduce efficiencies in the market, because everyone is still setting their own arbitrary prices. When it comes to obscure markets like Nigeria, where no one can really tell me what the naira is worth today. My point of view is that if you have a stable coin for local currency, then you allow an automated market maker to sort of determine the fair value based on supply and demand, and then that actually introduces transparency in the market. Would love to hear thoughts from you and the rest of the panel on is this thing worth doing? Because I've been thinking about it too, and I can raise the money. Are you going to be buying? Huh?
Yeah, but I think I'll buy it for different reasons, right? Not necessarily to solve the FX problem. That's a very unique problem. That's actually that's a Nigeria specific problem, or Kenya, when there was a problem with.
So we've lost your audio, Stone.
We've lost you, Stone.
So, Stone.
Okay. Stone.
Yeah, disconnect your headphones, my friend. Right? And we know what to buy you for your birthday.
I think there's value in local currency coming on chain, and it's purely for me for remittance. You have a lot of businesses that do cross-border remittances, and then you have the settlement issues with maybe banks being offline and all of that. It just introduces a way of building cross-border remittance in a different way. So imagine that you're converting money from the UK into Naira, and you don't need to move that money into a bank account, and that money can be held on chain as CNGN, for example. And whenever you need to move it into the banking system, you're free to move it. That creates a certain type of efficiency that even if the banking network is down today, you can still do cross-border remittance instantly. It also brings an interesting play where when I was talking to the folks that did CNGN, I was like, this is introducing an opportunity for you to even give people access to yield, Naira yield. It might be pointless to us now, but the fact that a lot of people are holding balances in banks today and they don't get decent yield on that, And if you have this and you can put, if you build your treasury well, you put the Naira backing the stablecoin in money market funds, you can return that yield to people easily. It allows people to also have the same way we have access to USD without necessarily being Americans or necessarily living in the US and having USDT. Well, I don't know. I don't decide if someone wants to have access to Nigerian Naira. Well, you might think it's pointless, but maybe someone else wants to have access to it. Then when you bring it on chain, that creates opportunities for trading. You don't know the types of perpetual market opportunity you can take by having access to Naira. If you want to short Naira, if you want to long the Naira, you can do that on chain now. If it's paired against USDT on chain. So for me, it's just interesting that if you can bring local currency on chain, I think there's more value to that. But the central bank definitely won't love that, because you start to take away some sort of capital control from them. When that starts to happen across different markets.
Yeah, I kind of like have like a separate view on that. I'm not necessarily a fan of local stablecoins. Especially because I strongly believe that stablecoins kind of like thrive on network effects, right? If there isn't like enough demand, you get low liquidity, you get low adoption. It becomes much more expensive, right? Because why would multiple people try to support that certain currency? Like if the network effect is not there. I mean, that's why the USD stablecoins is literally everywhere. Who literally wants is Naira? I mean, most people who live in the Naira these days don't even want the Naira, if we're being honest. Like I said earlier, whatever you do with your Naira yield is giving you 16% at best, right? If you calculate the real return compared to the inflationary environment, it's really bad. So most people don't even want to hold Naira, and once network effect is not there, I think stablecoins do not work. So local stablecoins do not make sense to me at this point. They still don't. I think about it every time, but they don't make sense to me at any point. And like Adeoye said, there's also the regulation mix, right? USDC is backed by US dollars in actual banks, right? You could tie down your CNGN in First Bank, and you know what? CBN writes a letter on a Friday and say, you know what? Just lock down those monies, right? We also do not have like that legal framework in place at this point. I mean, not just in Nigeria, but literally everywhere across Africa. So yeah, they do not make sense to me at this point. They do not make sense to me at this point because regulation and network effect. It's not just there. No one wants the Naira.
Yeah. No, but there's a difference between Naira stablecoin and local currency stablecoin. There's some currencies where it makes sense and you can, be able to pull serious yield. Like actually Uganda has some of the most liquid local currency investments. There's interesting places like Egypt, like South Africa. So if we remove just the Nigeria from the equation, does that change your position at all? And sorry, this is my last question.
Yes, because we need to move on to other questions.
I mean, I do not think it changes it. Again, it's network effect, right? If you are saying just Ugandans want the US, I don't know, whatever the Uganda currency is, I do not know that, sadly. but it feels like, again, it's network effect. Like, why would you have multiple people try to support that, right? I run a cross-border company focused on everybody. Maybe Uganda is probably 1% of my market. Why would I allocate engineering man hours to do that? It just doesn't make, I mean, business and financial sense at that point in time. Which is why I mentioned network effect. It sounds good on paper in theory, but if network effect is not there, it just doesn't translate to something that makes sense in the real physical world.
Can I say one last thing? Can you hear me?
Yes.
Sorry, I had to put my shades on because that's the only earphones I have. I think currency devaluation has really spoiled the party. This is all we are thinking about right now. I mentioned the other day, I think I tweeted that stablecoins is just more efficient e-money, right? So let's say in the UK, if you think about all these e-money companies, any company that is allowed to make e-money and distribute it in a wallet, basically having a local currency stablecoin or a stablecoin in that currency is exactly the same thing. It's just more efficient. So what I was starting to mention is that it would help us with like on-chain exchanges, which would happen anyway, which is kind of the on-ramping and off-ramping we're trying to do now on a daily basis. It would help with faster settlement of anything. When we get a license in any jurisdiction for e-money, what they're allowing us to do is basically the same exact thing. Like money is held against the wallet, the balances you have in your wallets. So a local currency stablecoin basically brings all the efficiencies of a US dollar stablecoin or of stablecoins into the local markets around on-ramp, off-ramp, exchange, speed of transfers, which now makes it different because if it's MTN mobile money, it's MTN mobile money, it's e-money, it's like it's not on chain, but it's really like exactly like a stablecoin that moves on the MTN ledger. But if then you're able to move that MTN mobile money across different ledgers or different e-money holders, that becomes a lot more efficient, right? Right now, if we pay from Evercent to MTN, there might be a delay because maybe there's a technical problem or something like that. If we were just using a local currency, Kenya shilling stablecoin, we wouldn't need that. You would be able to pay and somebody doesn't have to wait. We stopped going after things like payments on the street because for us to send money to MTN mobile money, we are using some APIs, sometimes they are broken, sometimes there's a problem, so we cannot actually do that business at all. If it was stablecoin based, we would put it on chain and it would move very quickly. So I think is all the advantages of stablecoins that we have been discussing would accrue for local currency stablecoins. And I think that would create a lot of efficiency.
All right, yes. Somebody made a quick point here about South Korea. I mean, I think we all in general we forget that there's actually Euro stable coins, but I don't know, has anyone ever held a Euro stable coin before? I don't know anyone that has held it before. And the Euros is literally something that is really huge. But
you know why? SEPA. Yeah.
Right.
Okay, just before we get into more questions, right, please give me a thumbs up if you're okay with spending another 10-15 minutes with us here, just because we know we're out of time. Okay, great. I mean, I don't even know if it's majority, but majority wins. So Akinkunle, do you want to go with your question now?
Absolutely. Thank you, Hoke, for organizing this. Thank you, speakers. My question is really around compliance, really. So I don't know if anyone read Adedeji Olowe's article two days ago, where he was speaking about some of the challenges that fintech companies generally will face, and one of them being compliance, right? And I think there's a lot of fintech startups have this, should I say, blasé attitude, especially with crypto companies, where they think, you know what, they essentially say, oh, you come, we don't have to do KYC, we don't need to know, just bring your money here and we can help you push it, right? And I think my view of this is I think it's that attitude, because you're essentially, there's a reason why compliance and all this AML, CFT things exist, right? You're trying to keep bad players out of the financial system, right? So essentially advertising to people to be like, you know what, no KYC, bring your money here, is signaling to the regulators that, you know what, we are enabling bad actors. You know, you essentially put a red mark on yourself, right? So I wonder if, and which is why I really like, you know, what a company like Busha has been doing, right? Proactively engaging the regulators and not waiting for them to come with their acts, because they will come. Especially if you're a custodial wallet, like all of you are. So if you're helping people move money, and obviously they're not operating self-hosted wallets, then that would be a problem, right? So I wonder if you think, what do you think is possible to do as a collective, right, to change that view? Do you think you need to change your messaging? Do you think you need to proactively continue to engage with regulators? But something has to give. You can't circumvent, you know, the compliance obligations you have. So what do you think about that, really?
Yeah, well, I think you referenced Busha there. For us, it's been important because we know that this is always going to be an issue, right? In different markets, we've wanted to launch in several African markets for a while, but you know, just because we've not been able to get that clarity, we've had to slow down significantly. But yeah, we have to prioritize this because that's the way you can ensure that customers will be protected and you also don't become the avenue for illicit transactions. You know, I don't know what that level we have this partnership with Chainalysis, and what that has done for us is made us is actually improved our operation flow, where any flagged inflow, for example, because it's easy to just send money to a wallet, convert it, and just withdraw. And we've had to flag so many accounts because either there's funds coming from a sanctioned wallet or sanctioned exchange or from sanctioned jurisdiction, or is being flagged as something that was used in a scam somewhere, from a Bitcoin ATM scam, you know, whatever it is. And that's important because you start to put trust in the system, because it's easy for external people or for banks or traditional finance people to just knock on players in the crypto industry as, you know, making fraudulent or criminal flow of money easier. So I think it's left to us in the space to also just hold ourselves to that standard, to make it clear that we're just making life easier for people, but we're not making it, you know, an easier conduit for illicit transactions. Yeah. So I think, like you said, I think it's an important thing for everybody to prioritize. Yeah.
Sorry.
Yeah, if I may.
Learning has no power.
Yeah. So I wanted to. I mean, compliance is extremely important, right?
And it's expensive.
Yeah, it's expensive, right? I did read the article, right? I mean, and the author said something about, you know, people really underestimate how much it eats into their margin because it's ridiculously expensive. It's expensive. But what I like to say is this, right? You can do anything you want on chain, right? If you're on chain, there's no KYC, there's nothing. You can do whatever you want to do, right? But the moment you have to actually go to the real world, it makes no sense for you to think there should be a, what is the word? There shouldn't be KYC. It makes no sense. Like Adeoye said, every transaction, like as an example, if you take payments from an OFAC sanctioned person, you can be in serious troubles, right? It doesn't even matter if it's not from someone directly, but somebody that is kind of like related, like, you know, addresses in crypto can have multiple oops, right? You know, let's say I want to send money to Eversend at the end of the day. I could send it through my younger brother, send it through an auntie, route it through, like, you know, 5-6 different oops before it actually gets to Eversend, but it's still illicit funds, right? And if such person was, say, OFAC sanctioned, you could run into serious troubles. So it's extremely important. Once you have to move into the real world, we have actual banks that custody our monies. They need to follow certain regulations to make sure, you know, monies are safe, monies are not missing, monies are mapped one-to-one, right? it makes no sense for crypto companies to say we don't expect this to happen. Because what it will also lead to is kind of like trust in the entire institution. If you tell me, oh, I've lost money, I mean, GTB would give me 1.5%, and GTB would never give me a loan, even if I pass 200 million naira there yearly, right? But they would never lose my money, right? That still kind of like gives people that kind of like setting trust. So it's extremely important. If you do want non-KYC, I don't think you should be building a centralized crypto product, because at the end of the day, it's people's money, it's people's funds. You want to make sure it's safe and secure, and they can always request for it. So it's extremely important, yeah.
And also, if you don't mind, just one thing I want to add is also for the sake of your company's operational risk, because a lot of this, so Europe, for example, has this VASP, requirement where essentially you need to report certain things if you're sending between custodial, basically VASPs, right? And they now have risk ratings for each of those things. So if you're not doing the things you're supposed to do, if you don't have, your compliance in check, you could actually be, it's called the travel rule, Bernard. Yes, you could be banned. You could be, you may not be able to receive money from certain jurisdictions. So for your own sake, I think it's what everyone should do for the industry.
Yes, I mean, it's just one of those. It's just one of the Twitter points that decentralization doesn't, like, in the real world, it doesn't really apply. If you want to do anything, stay on chain. I mean, you could get yield on chain. You could make money on chain. You could store your money on chain. But the moment you have to convert it to actual fiat, you just can't escape. You just can't escape it. Yeah.
All right. Thank you so much. So right now we can only take 3 more questions. Please, one question each, because we're out of time, and so that we can wrap this up. So Ayomide, can you go? Because I know you raised up your hand.
Okay. Hi, everybody. Can everybody hear me?
Yes, we can.
Okay. Sorry, my network has been glitchy all day. So, like, it's very good to listen to you guys. I think that the instance of stablecoins is actually very interesting, especially when you look at it as a use case to other sectors. Now, my question really, I have 2 questions. My question really relates to, I know there's been a lot of regulation, there's been a lot of conversation around improved regulation. I mean, I saw the SEC white paper, very brilliant, right, on stablecoins. Now, looking at the fact that for most stablecoins, for example, what Wizard said about the fact that we should have local stablecoins, I don't think it's possible anytime soon, because currencies across Africa, devaluation, liquidity, inflation. I mean, even traditional investors, if you invested 100K January last year, you probably had 40K by June last year. So those kind of things. Now, my question really now relates to, if you have DeFi, or if you have stablecoins being traded, or stablecoins being transferred, or settlements with stablecoins on DeFi, how do you maintain the safety of regulations, especially when it comes to the differences in regulations across different countries? Maybe you want to transact with Ghana, the regulator in Ghana is not really yet. Kenya, one regulator is faster than the other one, and tech is faster. Do you suggest that maybe there could be a Central African regulation on this, where every transaction will flow on that, just to like ensure that there's no it doesn't slow down transaction speed as it comes to like different regulation timelines across different countries? That was really my question. Yeah, and the reason why I was asking, like, for the safety of regulation of stablecoins on DeFi, because for example, look at Bybit, even though there's proof of reserves and all that, right? How do we ensure that safety is like the very first thing? It's totally locked down for the kind of transactions we have, especially when it comes to like multi-currencies for Africans. Now, I'm not even talking cross-border. I'm talking Africa to Africa, right? That's my question. Thanks.
Does anyone want to answer that question?
Yeah, I was trying to remember. I think there were maybe 3 or 4 questions in there, but I will tackle the one about Pan-African regulation. So Pan-African regulation would be fantastic, but it's not absolutely necessary for us to innovate, right? Any of the currencies that goes on chain, or that goes ahead, and any jurisdiction that has a stablecoin can always trade, for starters, just with USD, or with the USD stablecoins, or with the Euro stablecoins, or any of these other places that do have stablecoins already. So I think trying to get it all done together at the same time would kill regulation. Sorry, not regulation, innovation would kill innovation. So we need just 1, 2, 3 people moving, regulators moving, and then we build on from there. Like, we can't have everything. I usually see guys, like on Twitter saying, hey, there's all these companies, fintech startups that claim to be doing cross-border payments, and I can't send money to Cape Verde. No, we don't have to fix all 50-something African countries at a go, but it takes time. It's very slow. It's very difficult. But where we have made it such that you can send money from one place to another instantly at a low cost, it's fantastic. So we build onto that. So I don't think we should do it at the same time, or even wait for a Pan-African kind of thing. That's the part I think that I remember that I have an answer for.
Okay, thank you so much, Stone. Just because of time, if you have any more questions for the panelists, you can just follow them on LinkedIn, send your questions in. If you have some time, please drop your LinkedIn here for the people in the room to just follow you, and they can ask their questions. Ofyong, apologies. Do you want to quickly go? Just one question, please.
Yeah, I was going to mention something about stablecoin quickly, but I think the main thing is around compliance and regulators being slow. So my question to both Stone, Larry, and Adeoye is, if you were to inform the decision of how the regulatory framework for cryptocurrency and stablecoins, particularly in Africa, would be, how do you think about, or how are you approaching or thinking about the regulatory framework for stablecoins? And I want to play like the opposite side. Let's do it. We're going to do a stillman for this type of argument. The reason why regulators are kind of concerned is the second order effect of the macro, the impact on macroeconomy, on the macroeconomies of these countries. We have countries already getting dollarized because of the stable coins, and the US government doesn't mind because the digital USD is making sure they have a very strong hold on the global economy, despite the growing impact of BRICS. Secondly, I wanted to mention that the nature of the African currencies are still, I mean, we all know it's illiquid, so I shouldn't have to interface with USD before I do a transaction between Nigeria and Ghana. Like, that shouldn't have to happen. So it's not necessarily a store of value. It's more about medium of exchange. That's how I'm imagining it. And to Larry's point, it doesn't necessarily have to be, I mean, the asset composition of the stablecoin, local stablecoin, can be designed in such a way that it outpaces the yield, local yield, where it can be on par with USD, either using rebasing mechanism or accumulating mechanism, which is something that many USD alternatives to USDC and USDT have been already adopting or applying as a differentiation to their proposition. So I think the main question for me is, if all three of you guys were to inform the decision of your respective countries on how to design their regulatory framework, how do you intend on suggesting things that will make sure they are not too worried about tax evasion, macro impact, and also getting dollarized in terms of the economy?
Yeah, I think again, I have a short memory, so I'm going to start with the last few words you mentioned, which is tax evasion. I think it's more difficult to do that if a central bank or a regulator actually has allowed a stablecoin to operate and they've got control, because they can see everything. They can see every single exchange. So it's very, very bad for tax evasion for you to have stablecoins or a government, what do you call them? The government-based CBDCs. In terms of, a lot of people, when they talk about, blockchain and all these things, they scare regulators, because people are always used to the speculation of all these meme coins and shit coins and Bitcoin and all that stuff. But the way to keep it super simple is to look at, like I mentioned earlier, to look at e-money, where the regulator makes sure that all the stablecoin-based amounts that are issued are backed by actual reserves, right? Like a trust account. a local currency based stablecoin is just a more efficient ledger, and it's a clearer ledger that we can all look at. It's I don't see any of the risks we are talking about if we are controlling the trust accounts the exact way the regulator tells us that if every day, if you're holding Uganda shillings in your wallet, right, and they want to be able to verify that we are holding, if we claim that we are holding 1 million UGX, that's Uganda shillings, in people's wallets, it's backed up in a trust account somewhere, maybe even on bonds. They might allow you to do something like that. Right now, in some jurisdictions, they don't even allow that. It's the business model for USDC and USDT where they just buy securities. But if you do that, it's just simply a more efficient way of issuing e-money. You can exchange it with other currencies, with USDT. If Nigeria has one, with Nigerian Naira, and all that kind of stuff, exactly, safeguarding. And what's the other word? The separation from your operational accounts. All the basic stuff that happens with regulation and with e-money is what will happen. That's why I think in Africa, to issue a stablecoin successfully, somebody has to work with the regulator or the central bank. And it's probably going to be people who already have e-money licenses. People who are already allowed to issue e-money can go in front of the regulator and say, you know what, we can do this more efficiently.
Okay, thank you so much, Stone. Sorry, because of time again, I asked for 10 minutes, now we're way over 10 minutes again. So Nzube, do you want to ask a question quickly so one can close this up? We can't hear you.
Sure, of course. Yes, I'm Unzube. But again, I have a quick question. Thank you. Can you hear me now? Can you hear me? Can you hear me now?
Yes, yes.
Okay, cool. Thank you, Ma. I have a quick question. First, thanks to Hope for organizing, all protocol observed. I'm not going to comment on someone's subtle shade with no love for the Naira or appreciation of the UGX, which, by the way, is stronger than the Naira. But I wanted to get your thoughts on SDR stablecoin. So, standard drawing rights, please.
Sorry, I did not get that. Best words.
SDR stablecoins. So SDR basket of currencies.
Is that like hold on, I think we probably all don't know. That's like when it's a basket of currencies, right?
Yeah, basket stablecoins, yeah.
Yeah.
Special drawing rights, sorry. Yeah, SDRs.
Yeah, special drawing rights, like yeah, I get that. No, I absolutely have no comment.
None from me as well.
Same here, sadly.
Okay, cool. I was shocked to see, but no, because some of the thoughts you mentioned around how stablecoins operate, those are some of the premises on which SDR was built on. Anyway, but yeah, thank you so much for sharing.
Okay, thank you very much to our panelists. I'm super grateful for having you join us here. Thank you, Stone. Thank you, Larry. Thank you, Adeoye, and thank you, Bernard. So if there are any other questions that do come in, we'll just send you an email for you to answer them. But feel free to, for those that are in the room, feel free to follow all the panelists rather, and you can ask your questions if you want to get to know them, if you have businesses for them. Cool fact, Stone is a portfolio company of ours as well. So I just needed to drop that there because it's been on my head. But yeah, thank you guys so much. Before we go, we do have updates for those that are members of Oak. If you're not a member of Oak, go and join Oak. And just to note, we do this event every month where we bring industry leaders, experts to come and speak about what's going on in the ecosystem and just topics as well. So if you go to our website, there is somewhere called Oak Events, just down there. You can sign up early for all our events, both in real life events and virtual events that we do have every month. So over the summer, we usually have in real life events across the country, across different countries as well, just where our members are, just to educate them, to meet, to speak, and all of that. So I'll pass it on now to Joe, who is going to run us through the updates for the month. Over to you, Joe.
Hi, everyone. My name is Joe Kinvey. I'm one of the co-founders of Hoke. I am low-key jealous because now that I no longer run the club, it seems like we have 100+ people showing up at events. So thank you all for joining the session today. It's great to see Larry. Larry is also a portfolio company of Hoke. Sadly, Flute Coins didn't work out, but we're very excited to see what he works on next. So yeah.
That was really good.
Yeah.
Yeah.
Just a little Aaron. Yeah.
lessons.
I was a fan as well.
Yeah, looking forward to see what he builds next. And the great thing is builders build, and we're very excited to support more companies at Hoke. Just a couple of updates. What we do here at Hoke is we invest in companies, and right now we're funding one company called Catalog. Catalog is a company. We have slides, right? We do, yeah. So Catalog is an e-commerce platform. We have a Hoke fund that invested in Catalog a couple of years ago, and it's great to see that they're now raising capital again. They got into Techstars New York. If you're a member of Hoke, you should be able to see this on our platform. If you're not, please join to check it out. We are big fans of Silas, who's the founder of Catalog. So, and we're very excited. One surprising thing about this company is, before even we hosted Meet the Founder session, I think we had like so many commitments because a lot of people already have interacted with the company, which is really, really good to see. And yeah, you can find out about the companies that we're funding. One thing that we're doing different in 2025 is we're not bringing a lot of companies. We're spending a lot of time with great companies and just bringing one company at a time. So please, any companies that you see on platform, know that we've spent a lot of time with the founders. We know them, we've worked with them, and we believe that they're a company worth backing. So for those who also don't know, we not just run Hoke Club, we run other types of communities. And the latest one that we launched is called Diaspora House. Diaspora House makes it easy for people to invest across real estate in Africa and in diaspora. We are on our third property. We're fully funded one in Nairobi, halfway through a second one in Nairobi, and we're just about to start funding one in Cape Town. If you don't know about Diaspora House, please check it out. We operate the community on WhatsApp. And yeah, go to diasporahouse.com. We actually have the domain, and you'll be able to learn more there. If you're traveling across the continent, we have a place in Nairobi that you can stay. At. It's go to Airbnb, it's Diaspora House, and you'll be able to find it. So next time you're traveling to Nairobi, you'll be able to stay in one of the houses that we own there. Right. So Borderless. Borderless, if you have been a member of Hoke, we currently use a platform called Platform. Previous slide, and we're moving to Borderless. And I've been spending a lot of time working on Borderless, building the technology, and making it possible for anybody to set up their own community/syndicates. We do compliance. We're now regulated in the UK. We do KYC. We move money, stable coins that we have been using. We also provide community management tools. So if you want to use one of the best syndicate/community management tools on the market, Borderless will be live by the end of Q1. We're currently fundraising. We are about 80% into our fundraise, which has been super, super exciting. And we're hoping to have that closed very, very soon. If you want to stay in touch, go to onboardless.com, join our waitlist. And if you have a community, we will be able to provide you the tools to make your life slightly easier. We have a fund. We invest in a couple of companies, some of them that you've probably heard of, like Lemfi, Chaldec, Yewande, who I believe is on the call, runs the fund. If you want to learn more, please, we'll send all this information in the follow-up email. And yeah, that's it. Hook.co to stay in touch with us. We are very busy. We are doing a lot of work for the ecosystem. We're very, very fortunate to have the OGs. Somebody said that we're cheating to have like the best of the best on this call today. And you know, I actually agree. But I would like to thank everyone for joining the call today. And hopefully we'll see you at the next one. Thank you all.
Thank you. Bye, everyone.
Thank you, everyone. Thank you so much. It's going to be uploaded on YouTube as well. So you just go and subscribe to our YouTube. You're going to find the recording there. And our LinkedIn. Thank you, everyone. Have a good evening, morning, afternoon.